All right, ladies and gentlemen, welcome to another episode of the Beyond Seven Figures podcast. So, today's guest, he's an interesting gentleman. He covers so many different things, so many different strategies for business owners, 7 and 8 figure business owners that go in a multitude of different ways that you're going to find this interesting. In fact, what I would encourage you to do is get a pen and paper out because I have a feeling you're going to be taking notes. I know I have mine right next to me. He's a highly respected founding senior partner at a place called KKOS Lawyers, specializing in tax, legal, wealth, estate, asset protection planning. Let's face it, last thing that we want to do is tip the government by giving them more and more money, right? But then there's this other component of it, right? So not only is this gentleman just an expert when it comes to, I don't even know if it's necessarily just wealth creation, but keeping wealth, right? That's a huge part of wealth creation is keeping wealth. So a little bit of both. But then there's this other part of it, right? This other part where he's a YouTube personality, he's a best-selling author, he's a national speaker. So there's that other part, that marketing part of it that we're also going to kind of tap into a little bit because it's not only about keeping the wealth, but when somebody has managed to figure something out and being able to position themselves as a thought leader, I want to tap into that, see how he's been able to do that as well. He's a co-founder and board member of Directed IRA Trust Company. He's launched the Main Street Certified Tax Advisor Program. He trains CPAs and enrolled agents across the nation. He's a co-host of the Main Street Business Podcast and the Directed IRA Podcast. We can keep going on and on and on. Mark Kohler, welcome to the show, my friend.
Well, thanks for having me. What a kind and honorable introduction. I appreciate that. Whoever this guy is, I want to meet him. Let's do it. Bring him on.
So, what I want to actually start with before we get into the meat and potatoes of what you do to help business owners, tax structures, all that other fun stuff, because that part's going to be, I think, really the meat and potatoes that we're going to cover. You've done something that few people have been able to do. You've got the top 0.5% globally ranked podcast with over 2 million downloads. You've got 400,000 plus subscribers on YouTube with over 24 million views, 375 million plus impressions, over 102,000 books sold. Like, we can keep going on the different things that you've created, but it's one thing to create a personality if you're like, Mr. Beast and you're doing something crazy and funny and whatnot. But you've created a substantial following through law and wealth creation and whatnot. Like, what advice do you give to the 7 8 figure business owner right now that is like, man, I wish I could get, 1/10 of what you have? So how did you create that in your business?
Thank you for that. Well, I tapped into all the nerds out there. I'm like Michael Anthony Hall in 16 Candles. I was in the bathroom. I was the popular nerd. And if you can tap into all the nerds which I think are a lot of your followers, we just want to make money and build wealth and save taxes. Some might call that nerdy. So once you resonate with that crowd, you get a reputation. I'm going to say this. Maybe I'll put it in 2 or 3 ways. First, what's your message? Like, you've got to have a message you're so freaking passionate about. People feel it. They can't stop you from talking about it. You'll pull someone aside in a grocery store, even. I mean, at dinner parties. Now, you're not obnoxious, but there is something that you've got to share with the world. And whatever that is that's related to your business, it's a lost leader, it's a fundamental concept or purpose or something. And even as an individual, you've got to have that. That's so masculine. It's
Yeah.
a superior man. Like, what do you want? What are you really going after? And once you've got that, that's the first half of the equation for me.
Yeah.
The second part of how this is, and I'm so passionate about the tax and legal planning and Main Street small business. I love small business and everything related to that message. The second thing is just being consistent. I was in here with my producer yesterday and we were talking about when did I start on YouTube? And I think it was like 11 years ago. And so many people are so nervous to just start posting or start a video or whatever. Like, it's got to be perfect and everybody's going to look at me. And those old videos are hilarious because I look back at myself, but I did it. I did a blog article every Monday night for the last 15 years.
Wow.
I do a video every week on YouTube, hell or high water. And sometimes I'm saying the same darn thing, but maybe I'm saying it a little better. I'm saying it a little differently. And now that video production's increased, the blog production's increased. But back in 2005, I mean, this is almost 19 years ago. I wrote my first book, which cascaded into more articles and doing just videos. I grabbed my 16-year-old son and said, "Get that camera, let's go." I was right there when YouTube was just starting. I was doing blog talk radio before podcasts even exist,
Mhm.
but I was consistent every week, every week, every week. And there was maybe 10 followers or 10 listeners, but I did it no matter what. And it's a snowball. And you just got to slowly gather more and more snow as it goes down the hill. And voila, I don't know.
And how much do you think that played into your overall success?
Oh, huge. And because it sends a message when you're consistent, it sends this underlying message that you're reliable.
Yeah.
If everybody knows Tuesday morning, they're going to see an email from me with a tip for the week and a blog article every week.
Yeah.
They're like, I can rely on him or his team or his people. And I've got great people around me. We've over 150 employees now in our organizations. But that consistency means something
Yeah.
beyond just top of mind awareness.
We've talked a lot on this podcast about this idea that consumption drives conversion. The more content somebody consumes, the more that helps to drive that conversion, where somebody decides they go from, I don't know who you are to, man, I just can't wait to buy your book, enroll in your program, whatever that might be. It's
Yeah.
the whole art of demand creation. And so, what you're doing and the content and so forth has been key. But have you noticed over the years, 15 years of creating content, if you were to summarize what you do in a formula, if you were to advise somebody, if you're like, all right, here's a formula that you need to, beyond consistency, I mean, like in the actual content, what is the formula that you would say, hey, if you want to create a video today, follow this formula? Or is it just, I just show up, I talk from the heart, an important matter. I don't worry about what the gurus are saying about all this like fancy optimization. It's just the content is a content. Like, where are you on that?
Well, obviously, I've evolved. We all get better at creating content.
Yeah.
When I was
Right.
first starting, it was just like, bleh, like I've just got to talk, and you just got to start to create. And that's why I think people get so nervous to just start. But anyway, over time, it's evolved to where I'm much more intentional about every post, every article,
Yeah.
every podcast, every video. And I would say the basic formula is, I almost need to turn to my team here. It helps me out a lot of times, is because they keep me on track. Is there's some sort of problem. I've got it. So that's point number one in every video. There's a problem or a desire. Like, what is it? I want more of this, or you don't want this,
Yeah.
or I've got to get their attention.
Yeah.
And then number two, I explain the problem. So here's the problem, and it gets everybody's attention. Okay, then I explain it. And then number three, I provide a solution that's very, very specific.
Yeah.
I'm not just smoke and mirrors. A lot of people are rah, 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 and blah, blah, blah. I want to do rah, 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 and then explain it. And then number four, a call to action.
Yeah.
Even if that call to action is keep following me, or I'll keep you more, look out for this next video, or go to this video, or buy this, or come here, or do that. There's always a call to action. So there's some sort of awareness, and then an explanation as to the problem, a solution, and then a call to action. And if I can follow that general framework when I'm talking, it resonates with people because they just don't want to hear crap and they want to know, what do I do with this? I think those are the 4 buttons to hit.
That's really important. And for our listeners, notice he wasn't talking about a gimmick, a hack, whatever that might be. It all came down to, you could also term it the PAS format: problem, agitate, solve. The problem, then he defines it in such a way that it connects in their brain, like, oh, that's me. And once you get that hook, once somebody connects the dots in their brain, they go, hey, that's me. Now, if the internet went out, they'd be like, what's going on? Like, I have to have the answer. Like, he just sucked them in at that point to be like, all right, you have just defined the challenge and the issue that I have right now. Like, how do I solve it? So we're in 2024. Inflation is at a near record high, at least over the short term. What are you telling your followers?
It depends on the follower. This inflation is not bad for some people. If you're holding notes, if interest and rates of return and the interest type bearing investments are important, you're killing it. And so they're not complaining. And then there's people that are in a business trying to scale and grow, watching out for costs. And although inflation is probably the predecessor to that, they see it as I've got to manage costs and still gain marketability and profit. I'm worried about my EBITDA and my bottom line. And then there's this other third group that I spoke to last week with several videos that was really important to me too. And it's those people that are in the middle to lower income, young people, especially in their 20s and 30s, that are like, it's hard. They're trying to make ends meet. And I shot a couple videos and did some posts regarding what do I do to make ends meet. And I talked about the side hustle and the ability to make more money because we're not going to be able to really cut costs on basic human needs, cost of housing, cost of food, cost of fuel and transportation. Their only solution is to make more money. And I love the side hustle community and that whole conversation because it's a way people can make more money. And because I get hate from young people who are like, what are you talking about putting 600 a month into an IRA or a Roth IRA and this, and you're going to build a mega backdoor Roth and grow and la, la, la. And yeah, that message is for people that are making money, a lot of it, but there's also a point of I need to save money and start building wealth at every age. And they're like, I can't even come up with that money. You're crazy. And I said, you know what? Let me tell you about when I was a janitor, when I was going to college, and I would go out and clean a dentist's office for 400 bucks a month because I had to make that extra 400 bucks. So if you're complaining that all your costs have gone up $1,000 every month, I got it. Let's go hit the streets. Let's go be a janitor. Let's be a landscaper. Let's go mow a lawn. It's not below me. And I think that message needs to be heard with a certain crowd as well. So anyway, gosh,
So, that's a low income, but even if you go, a lot of small businesses right now are feeling the pinch, right? And the CEO has, in many cases, they've moved from the visionary, where it was great, they had a visionary and, the team was there to execute on the vision, to now all of a sudden their version of being a janitor and sweeping the floors or whatever, their version is, I'm going to have to work in the pipeline. I got to now go in the business. So many of them are going from visionary to now, you know what? It's time for me to pick up the phone to do some prospecting, do whatever, because I have to fill the pipeline in order to bring in more sales in some cases. But I also want to talk about it goes both sides, though. It's one thing to say, hey, we need to make more money. But if you're already paying 37, 40%, whatnot to the government, you can make a hell of a lot more money without bringing in an extra dollar of revenue if you can save the money that you're inadvertently tipping the government.
Charlie, I'm with you. Yeah, I've got that group too. I got messages for them. I was just telling you last week I was helping out the little guy. Holy crap, I love it. And for those business owners that are feeling the pinch, if I may jump in here,
Yeah.
I definitely I've got messages for them. It's easier to save money than make money. That's what you're saying. I'll just say it another way.
Yeah.
You want to start saving on taxes? Holy crap, we can take some strategies very, very quickly and print money by just being smarter with tax planning and getting away from our boring old CPA that's got to stick up their butt and is conservative. And we need to take control of our ship. Absolutely. And also, I would say to those business owners, making more money doesn't mean going out and cleaning a dentist office in the night. It means optimizing my business.
Yes.
I'm not going to go get on the line. I'm going to get in there and systemize.
Yeah.
Today, I was just in one of our staff meetings in our law firm talking about better systemization, better sales procedures, better deliverability. And when we can work on the business and just make a small it's always 3 or 4 things that need to be coordinated to come together in that business. And I can sit back and go, okay, there's where the bottleneck is. And I can increase productivity by just 5% or this or that. That can have a massive impact on the bottom line by just doing some optimization, looking at my KPIs and all that. Whether they're a 100 millionaire client, $200,000 client, or a brand new business owner, I got a message. Freaking A. I'm ready to roll. Let's do it.
You brought up a point. A lot of business owners, they have an accountant and they just assume that their accountant is going to be the one that's going to give them the tax advice. In all my years of working with some of the smartest accountants in the planet, I could tell you that they're really good at filling out my taxes and following sort of like the standard protocol, but they're really bad at providing creative solutions to save taxes. And I've worked with some killer accountants across the world. And I've yet to find one that was exceptional in providing creative tax solutions.
You're in the right spot finally. You're going to love this. So what I launched as my life's calling 2.5 years ago is we started to develop the Main Street Tax Pro certification. I realized I was spending all this time training my internal tax lawyers and CPAs in our accounting firm to be tax advisors, not compliance, not just filling out forms, looking in the rearview mirror, but actually do proactive planning. December is our busiest month of the year. Tax season, don't care. We don't care. You can punt, extend, do whatever. Compliance is one thing. Tax advisory, whole other world. And that's the holy grail that accountants want. They want it, Charlie. It's not that they don't want it. They don't know how to do it. They don't learn it in undergrad. They don't learn it in a master's program or law school. They don't learn it from the old guy down in the corner office. They hope they learn something. Continuing education, shoot me in the head. So I put together a certification program, 80 strategies, 12 modules. We meet twice a week. I've got over almost 800 to 1,000 CPAs advisors around the country that I now train weekly to be advisors.
Yeah.
And the accounting industry is on fire. The old boys club, they're retiring in droves, and enrollment is down at universities around the country in accounting programs because it's the barrier to entry to be a CPA. If the accounting industry is struggling, and I'm running into the building, that's on fire saying, hey, we can do this. We can be tax advisors. And I teach them how to have an actual consultation, put strategies on the table that move the needle. Freaking, hey, we can throw 5, 10 down right now, whatever. I just love it. But you're right. It's so hard for the business owner because they're starving for this. And the accountant is over here like, I want to give it to you, but I don't know how. And then I'm just like, matchmaker, bring me a,
Right.
that's from Fiddler on the Roof. I'm not going to try to, go into too much song and dance. But anyway, I want to bring them together. And I'm doing it, Charlie. It's freaking awesome. I just love it.
What are some uncommon tax strategies that the business owner today wouldn't have heard from their accountant?
The problem is they're not even talking about the ones that sometimes are right there staring you in the face.
Yep.
It's amazing. I just say for the average business owner, let's rattle off a few that would be sometimes outside of the box. First of all, the S corporation. One of the most important ones is that every person creating 1099 income better have an S corporation and a tactical strategy for reasonable comp. And I am so sick and tired of accountants being afraid of their own shadow, not taking aggressive positions on payroll. I go to every reasonable comp CE in the country. I teach CE on this. I've got a payroll matrix to teach people. You do not need software to do this, but I swear 80% of business owners that come on board or get a consult with our team or our accounting network, their payroll is jacked up. They're paying way too much in FICA. And I hate the F word. I hate FICA. Avoid FICA. What the FICA? No.
So a lot of small business owners don't put themselves on salary. They take draws based on the cash that's available. So should they put themselves on a salary or continue their play on just take whatever cash is available at the end of every month or whatever?
It's interesting you say that. You do both. It's the strategy. When you have an S corporation, you're going to take your income anytime you want. It's called a draw. Take it every week, every month. I don't care. But then quarterly, we're going to peg a certain amount of that as payroll. If you don't and you stay in an LLC format, you're paying FICA on every dollar. On a $200,000 equation, that could be close to $18,000 in FICA. I drop you into an S corp and we do a 70K payroll. I'm going to cut that by half to a third. And accountants out there listening right now are freaking out. They're going, you can't do that. Or you're a business owner out there listening going, my accountant said that's too high risk. No, you've got the wrong accountant. Remember, your accountant was the one up on the bleachers playing the flute. You want to go with the accountant that was under the bleachers smoking weed. That's the guy you want.
I misinterpreted. I thought you were saying, LLC, but I think it's like S Corp or whatever. There's a certain selection that you can make when you form your LLC. Are you saying, no, don't do the LLC, file an S Corp, an actual Inc. S Corp, or you can still get away with it through the LLC with that special election?
I'm so glad we're talking here, Charlie. You and I could spend 2 hours together, and I'm going to save you thousands by the end of this call. An LLC taxed as an S Corp is the same as an Inc. with taxed as an S Corp. So you can have an Inc. that's a C or an S. First problem is they set up an LLC and they stay there. They don't know to make the S election, and their accountant's not helping them make that election. Second problem is they make the election, and then they take way too much in payroll. And I mean, we could spend a whole hour on this, and I'll break it down. I stand behind it. I give seminars on this. I teach CE on it. And accountants out there, get over it and be more aggressive in this position. This is strategy one. I mean, you're just talking about common or uncommon. The thousands of dollars we help clients just getting their S corporation dialed in, can't even count it. It's off the chart. Okay, number two. There's a combination of travel, dining, and family that is just super powerful. For example, every LLC should have a board of advisors. Every Inc. should have a board of directors. If you've got a family, teenagers and up, your spouse should be on your board of directors or board of advisors. And some of you are like, well, I have an LLC. I don't have a board of advisors. Yeah, you probably knocked it out on LegalZoom on a weekend thinking you were saving money. You've screwed yourself, right? Let's really get some proactive planning going. And then they say, with who? Well, I know with who. I can tell you where to go now. But anyway, so you have a board of advisors with your LLC. You have a board of directors with your Inc. It's the same thing, Microsoft and Amazon. They all have big board of directors meetings. You should too. Now you're taking your annual or quarterly trips with your family who's on your board to talk about business and teach financial literacy, to get your family involved in the business, to talk about the business transfer to the next generation. And how are we going to do this as a family and teaching real estate investing and saving strategies? We're bringing our family together in a board meeting, a family board meeting. Oh, and by the way, you're writing off your travel. You're writing off the dining. Oh, and are you giving your kids money? You're paying taxes at this level and giving money to your kids in college to get through college. You're paying for your kids' tuition. Oh, that's smart. Why don't we 1099 the kids for being involved in the business and on the board? Now you're taking a tax write off and they may not be paying any tax at all.
Can you 1099 them if they don't have any other clients or any other business?
Oh, hell yeah. I've got books on this. I write books on Entrepreneur Magazine and articles on Entrepreneur Magazine. This is the funny part, Charlie. This is common. This is mainstream. But you got accountants afraid of their own shadow with sticks up their butt. Sorry, this last time I'll say that can't think outside of a box
Yeah.
and do this. Every one of my clients, think of a realtor, an anesthesiologist, a doctor, a CPA, an accountant, an engineer, an online influencer. If you have kids under age 18, they should be helping you in your business. Are they cleaning
Yeah.
the office? Are they helping with
Yeah.
your social media? Are they doing your video? What are they doing? And then you're paying your kids. You are no longer paying taxes at 30 or 40% or more when you combine state. You're paying your kids to help in your business. You just
Yeah.
got a tax write-off for that. They don't even pay tax. How many business owners do that? Again, 80% of new business owners didn't even know they could put their family on a board
Yeah.
or have it travel or dining or pay their kids. So anyway, you just get me going, Charlie. But those, to me, those are common. For an accountant that doesn't think outside of the box, those are uncommon or risky, and they're wrong.
Yeah.
They're dead wrong.
Yeah, I agree. My son, he does video editing and he's also a professional race car driver or training to be a professional race car driver. That's a very
Oh,
expensive
fun.
endeavor. For those who don't know, like professional racing, I mean, that's a multi six figure investment per year in and of itself. But for him, he has to work in my company so that I can pay him and then that can help filter into some of his race rather than me taking my money after tax and then having to invest, which inevitably I have to do some of that.
Well, maybe not. Some kids you 1099, some kids you W-2. It depends on their role in the business. I'm not saying we're skirting any rules or laws here, and all the kids need to play an active role. I'm just on strategy 3 or 4 here. I mean, this is just getting the family involved, writing off better travel and dining. We can get into electronics, we get into equipment, home office, vehicle, auto, RVs. Then we get into real estate investments with short-term rentals, long-term rentals, crypto strategies. All of this, people, this is what your tax advisor, and Charlie, you identified it. This is what people are starving for on a quarterly conversation with their accountant going, how can we move the needle and save taxes? How can I better invest my money? Get to Main Street Tax Pros, check them out. I got accountants in a network. I don't even make money on their relationship with you. You can interview them. They don't get to be on there unless they're meeting with me twice a week and speaking Mark Kohler through an online exam process of almost 1,000 questions that they have to score and maintain, or they don't get a referral from me. That's what people are starving for.
Now let's take the opposite. What are some things that people are doing that they think is compliant and they think they're saving taxes, but what they're actually doing is setting themselves up for potential audit and penalty? Is there something that people are doing that is incorrect that they shouldn't be doing that inadvertently is setting themselves up for potential pain?
Wow. Okay. This is good. Man, Charlie, you asked great questions. All right. No one's asked me this in a while. Okay. I'll put some screw ups that we'll see. Let's just go easy. Clients that continue to write off too much and they're using the business as just a way to create losses to offset their W-2 and other income. They're going to violate the hobby loss rule and they're going to have issues with the IRS and have to recapture taxes because it's a facade. Number two, I just was dealing with this today, the deferred sales trust or the monetized installment sale. It's on the IRS Dirty Dozen. If anybody wants to know what's not working, you can Google IRS Dirty Dozen. They publish 12 strategies they're going after every year. By the way, Biden appointed $87 billion in new revenue for agents. And as you heard on, maybe you were listening to the Republican convention yesterday, there's estimates now of over 200% increase in IRS penalties across the US. And so we want to watch out for those strategies that are on the Dirty Dozen. Monetized installment sales one, it's trying to avoid a capital gain scenario. Next is clients that are trying to play the real estate professional when they really don't qualify.
Yeah.
They're going to get in hot water for that one. Clients that are taking way too much in auto when they really don't have auto expenses that are justifiable. They're writing off commuting when they shouldn't be. But then I have clients that aren't writing off their auto enough or travel enough. Every time I take a trip, I'm trying to write it off. I have family members like, can you just show me you love me and take me on a trip that's not a write-off?
Yeah.
No, I can't do it. I can't do it. I gotta have a write-off. I need a conference. I need to meet with a client. I gotta sneak down into the lobby and sell a book. I gotta do something because I'm gonna write off this freaking trip. Now I can't write off 10 days in the Caymans, but family is business and business is family.
Yeah.
And are we integrating our family into our boards and having regular meetings with our family about business succession and financial literacy? And the business is the perfect way to do that. And when you have an accountant that is helping facilitate that, and I'm not even talking about asset protection, privacy planning, self-directing IRAs and 401ks into what you know best, estate planning into, these are all modules that my advisors have to learn and talk about. How to build a debt snowball, how to help a client build a $1 million Roth IRA by age 55, tax-free. How do we do those things?
Yeah.
And so it's just so exciting. I'm so grateful that you've had me here today because people need to know that there are options and solutions out there and it's doable.
Now, because of the pressure on the IRS, like you mentioned, the increase in the investment the current administration made in the IRS and whatnot, I think it's important to go there when it comes to an audit. I can tell you firsthand, I've been audited 3 times. The first time I was audited was because I made too little. The second time I got audited was because I made too much. The third time I got audited is because they wanted to go through all my expenses. And that was more of a random audit. And I got to tell you, on that audit, the first 2 were easy, no problem. The last one, and my general rule of thumb is you never meet with an IRS agent. That all goes to your accountant or your tax attorney. You let them handle it 100%. Never communicate with them unless your accountant or your tax attorney tells you to. But that last one, I had to provide an invoice, a canceled check, or a credit card statement, and an explanation for how that expense was used in business. Every single expense, whether it was 99 cents or $9,999, whatever it is, didn't matter. Every expense, that was painful. What advice do you have if somebody listening, an audit gets triggered? What advice do you have for them on how to beat that?
Yeah, you bet. First of all, I've got to say this for just so people don't, start curl into a ball and cry. That audit, you had that comprehensive audit at that last experience, very, very rare. 1 in 100,000 taxpayers are going to face that. They oftentimes are random. Many times they're going after someone that they suspect bad stuff, but very, very rare. I think I've had one client in 20 years, and I've had thousands and thousands of clients. So it's very rare. I'm so sorry you had to go through that. So everybody don't freak out too much there. The next thing I would say, gosh, there's so much. I actually hold podcasts and strategies and conferences on how to avoid an audit. But I'll just say one of the best things to do is continue to take pictures of every receipt, put them in a digital folder. You don't have to have the paper. Digital receipts are fine. Keep track, good records. Keep on QuickBooks to use credit cards and debit cards. Stay away from cash. If you do get audited, it's 3 years after the fact. The IRS is going to come and say, we were auditing you for 3 years ago. And you're going to be like, and then you're going to go to your digital folders, your Dropbox, your Google Drives, wherever they're at, and just start printing everything else. If you've got decent records and you're doing a good job with this anyway, you're already ahead of the curve. And I want to say this too, that 90% of audits are line item audits. That's where they go, this line's a little too high. Tell us what's going on. They don't have the resources at the time or want to go chase down someone with the nth degree like they did with you. Very, very rare, like I said. So most audits are going to be a line item situation if you're keeping good records. And by the way, folks, when you keep good records, you're going to be a better business owner anyway.
Oh,
You're
for
going to be
sure.
a better investor and all that. And so if you're operating your life and if you feel like the best motivation is to avoid an audit and it's going to get you to do things that you should be doing anyway, fine. Let that fear motivate you. But use that knowledge, use that information. In business, the more information we have, the better we operate. The more wealth we build, the more money we make. So you're knocking out several birds with one stone with just operating properly. And I just say this, if you get an IRS notice, always respond. Do not put them in a drawer. Get counsel, typically tax lawyer or CPA level at least, and
Yep.
someone that be careful of the online late night people that are going to promise you pennies on the dollar. They're
Yeah.
scams, and respond and get engaged in the process. Don't lose sleep. So many people envision it worse than it really is.
One of the audits, the IRS ended up owing me money. It actually worked out really well for us. It was more of a time suck than anything else. It never ended up costing us any money because I always operated with the right advisors and the right people to point me in line. But that's the thing, like, just because your buddy over at the bar said, "Hey, here's what I'm doing to save taxes," and you turn around and say, "Oh, I'm going to do that too," like, that's not a good strategy.
I like that you said that because people are resorting to that because they're
Yeah.
not getting it from their accountant. If that person had a quality conversation every quarter with an advisor, a tax advisor bringing them ideas and they were proactively planning, would he have even asked his buddy at the bar? He wouldn't even go there
Yeah.
because he'd already know he had an intentional, proactive plan for building wealth and saving taxes. So I'm sure you'll put it down in the show description, but at markjkohler.com, you can go to the Tax Pro Network. You can interview young, old, male, female, West Coast, East Coast, big firm, little firm. Find someone that speaks your language. Literally, I have Spanish speaking accountants in our program. And if they're there, they've been certified by Mark Kohler, and at least you're getting a better start than you already have now. And get a second opinion. I'm not saying you got to fire your sister-in-law, but maybe the spaghetti dinner and her doing your taxes on TurboTax
Yeah.
isn't cutting it. Let's upgrade.
Well, here's the other thing too, right? I'm sure this is one of the tips that you give people, but part of being on the side of, like, if you look at what the IRS looks at and the different flags and whatnot, I've always understood it. You might tell me this wrong. Your chances of getting audited go up if you do TurboTax or all that other stuff. But if you hire a kick-ass accountant, then your odds of getting audited go down, especially if you have a great accountant, maybe has tax attorneys as part of their firm, whatever it might be. But if you have a reputable person, the odds of audit go down as opposed to just like, your H&R Block person. Am I right or am I wrong from your experience?
You can't say you're wrong because obviously, if you're doing your own tax return versus someone that's reputable, there's going to be a 1% better result working with that. Is that a major factor? Hell no. With all due respect to your opinion, it's not a bad one. But I think the highest chance of an audit is a Schedule C. People that are doing a single member LLC, 15 times more chance of an audit. When you do an S corporation or an S election on an LLC, your chances of an audit go down by 1,500%. Your chances of an audit are terrible when you use round numbers. Your chances of an audit are terrible when you're taking expenses in ratios that are outside the norm for your industry. Your chances of an audit go up when you're commingling and you're throwing crap around. And you can have a reputable accountant and still get caught in the crosshairs of those issues. It's interesting. We're talking about avoiding audits. I just don't have that many clients or people coming to my door with as much audit issues as starving for a proactive plan. And I reduce your audit risk. When you reduce how much tax you're paying, you're not increasing your audit risk. Those are not correlated. So anyway, I hope that makes sense.
It actually does make a lot of sense. I actually spoke with an IRS attorney, a former IRS attorney, and I was asking all these different questions about, well, I heard this, I heard that, and whatnot. One of the things that I heard was that, hey, I heard that if I write off my home office, that increases my chances of an audit. And he goes, well, where'd you hear that? I'm like, I don't know, I heard it. And he goes, it does not increase your chances of an
I
audit.
love it. That's exactly right.
And I was like, oh, so, knowing, the right sources and whatnot. But one thing to your stats, it's like when you talk about the company, like the IRS, they're not dumb. If you have no employees, but you're making several $1,000,000 a year, they know, statistically speaking, the odds of you making several $1,000,000 a year with no employees are a fraction of a percent. Like, chances are, if you're making millions of dollars a year, you're 1099ing people that should be W 2. And that could potentially present some sort of an issue there. But that's a whole different topic for another
Yeah.
ballpark.
Yeah. But since you said it, I'll say it briefly. Your actual risk of an audit is with the state tax commissions because they're going after SUDA and workers' comp. The IRS comes along later with FUTA and FICA. If the IRS had their choice, they'd rather have you 1099 someone because they're going to nail the recipient for self employment tax. It's the states that are looking for money there. And I'll say this too, it's not the gross figure on the tax return that's going to trigger a payroll subcontractor audit. It's how much you have on the subcontractor line compared to the no employee line. And because I have clients that are making several $1,000,000, we are a little more creative on where we write things off, and ethically as well as creatively. So I don't know. Yeah, anyway, yeah, I like your point though. It's true that a lot of people give the IRS more credit than they deserve. They have a computer system that identifies issues, and a good accountant is going to be able to avoid a lot of those red flags.
I guess the reason why I bring this up, we talk about, making money, we talk about saving money, and, we always have to be in the business of also understanding like you've got risk, but how are you going to proactively manage it in the event that it triggers an audit? And it's funny, the IRS attorney said to me, he said, if you've never been audited, then you're not taking enough risk. And I'm like, what does that mean? And he said, you should be taking write offs. You should be doing this. If you're not, like, you are wasting a lot of money. That actually came from the former IRS attorney. If you've never had an audit, he said, you're not taking enough risk. And I'm like, huh? And he says, it's not a bad thing. If you've done everything right, you've got the right advice, and you've dotted your I's, you've crossed your T's, and so forth, and don't be afraid of an audit. But I'm telling you, if you've never been audited, you're not taking enough risk. So it's like, that is another perspective to look at it.
Not a barometer that I want to per se, but there definitely makes sense. Absolutely. I think we are on a new horizon here where business owners are waking up to the fact they can find tax advisors, not just compliance, and accountants are figuring out they want to be tax advisors. They just need to learn how. And we're training and finding them and helping them get to know each other, the business owner and the advisor, because it's so fun. It's so exciting. It really is. When people catch the vision of what they can do to really build wealth and take tax savings and put it to the bottom line, it's amazing.
This is the Beyond Seven Figures podcast. My favorite question to ask guests are, what would be your number one biggest best tip for our business owners right now that want to take their business beyond seven figures?
Backdoor Roth IRA. Now, you threw in that last little caveat, take your business to the next level. Here's my problem. And I think a lot of you business owners listening to this will resonate. We think our business is our best investment. And it's good. It is. We built it. We love it. We're passionate about it. But too many business owners don't extract some degree of profit and reinvest it. They just put all their money back in their business. And I did that for years. I did it for years. While partners of mine were still peeling off a little of their profit. And instead of driving it back into their business, they're putting it into some investments that could be real estate or tax preferred investments. It could be crypto. It could be stocks, bonds, and mutual, whatever. But it wasn't all in their business. So sometimes I'm like, let's just, not hyper focus on building the business. Yeah, I'm going for a multiple and I'm going to exit and I get that. Okay. But at the end of the day, what do you have over here in the corner if you need it? And that's the Roth IRA. And I want you building up these mega backdoor Roths. I've got videos and all sorts of writings on them where you can literally, and just even under age 50 this year, put close to $69,000 in a Roth IRA and invest it in real estate, notes, stocks, crypto, syndications, whatever you love, and self-directing a Roth IRA. Peter Thiel has a $6 billion Roth now, and he started with 6 grand in 2000. Yeah, everybody starts at the same spot. Mitt Romney, $100 million Roth IRA. He uses his Roth IRA in his deals. So Wall Street doesn't tell you this because they don't want you to self-direct. They want to churn your money and the trillions of dollars in big 401k fees and broker-dealer fees and all that. No, you can pull your money, self-direct it, and invest it and build a Roth IRA. I do the math all the time for people in their 20s, 30s, 40s. It is not hard. I know that sounds weird, but it's not hard to have a $2 million Roth when you're ready to retire. Tax-free ATM. But we've got to peel a little money out of our business to do it and not just drive every dollar back into our business, because the rug can get pulled out anytime. We got to be careful.
In a self-directed IRA, you said you can invest in real estate. Can you invest back in your business?
Generally, no. That would be a prohibited transaction, but you can invest in other businesses that you might have an interest in.
Okay.
You could loan money back to yourself at times with the right structure. There's a Rob strategy out there that's fairly technical. But see, again, what did you do? You put the money back in your business. Stop it, people. Stop it. Take that money and go invest it in another freaking business outside of your industry and diversify. Go buy some crypto. I have a Roth IRA doing crypto mining. I have my health savings account own some low income housing. I have a 401k that owns cattle. I have another IRA that owns a rental property. I want my IRAs owning stuff that I'm not in business in.
Yeah.
So to hedge against my industry
Got it.
and to have money in other buckets. And I'm doing it all tax free.
Awesome, man. So, Mark, people want to learn about you, the work that you do, whatnot. Where do we send them?
Oh, thank you so much. MarkJKohler.com. Go from there to the law firm, to the network of accountants. If you're a CPA or enrolled agent and hearing this and you're intrigued, please come over, do a demo and look at our program. It's affordable. It's a tax write-off, and I will make you an advisor. I guarantee it. I literally have a guarantee. I will make you an advisor. You'll be making more money, helping more people, and love your life. Get over and check it out. If you're demanding this of your accountant, say, I'm going to fire you, or go get your crap together. Go follow this Kohler guy. He'll help you out anyway. Demand it. Why are we so afraid of our accountants? Why? Who made them gods, right? You guys, this is your ship. Captain it. If your first mate sucks, throw him over. Gosh.
Got it. Awesome. All right. So that's markjkohler.com if you want to learn more about different tax strategies and so forth. markjkohler.com. And for more tips and strategies for taking your business beyond seven figures, also check us out at predictableprofits.com. Again, that's predictableprofits.com. This is Charles Gaudet with my new friend Mark Kohler, and I will see you in another episode.